Welcome to my channel CAI Academy, and today we are going to discuss about what we mean by provision for onerous contract. When does the provision for onerous contract is required? When any contract becomes onerous, a provision is required. So first of all, we will understand what do we mean by onerous contract. Any contract becomes onerous where the unavoidable cost of meeting the obligations under this contract exceeds the economic benefit which is expected to be received from this contract. So now provision is required for this contract which has become onerous. Okay, how we measure the provision amount? The measurement of provision amount can be done the lower of the two, which two, the cost of fulfilling the contract or the cost of not fulfilling the contract. That is, if any penalty is there for termination of the contract, right? So lower of the two will be measured as the amount of provision which is required. What is accounting treatment given? The accounting treatment is given that our liability is recognized in the balance sheet and it is shown as a expense in the profit and loss account. Okay, any contract becomes onerous, okay, and it has to be executory to be taken as a main point for making the provision for onerous contract. So the two points which are required for our contract provision to be made for onerous contract is that it has to be onerous as well as executory. Okay, what do we mean executory? Any contract is executory when both of the parties to the contract has not performed any obligations or both have performed partially to some extent in equal amount, right? So that becomes an executory contract. But all executory contracts are not recognized in the balance sheet, okay, which these treatments we are doing as per Ind AS 37, right? So what does it say? All executory contracts need not to be made provisions for, but which are not onerous. But any contract which is onerous, which converts into onerous as well as executory, then we need to make a provision for it. Okay, so provision for onerous contract is created. For example, let's take, we have taken a lease for 5 years, okay, and now we have for office space, and after that sometime we have got a location which is much cheaper than the lease amount. So what we will prefer with the lease, the cheaper location place. But what happens now, this lease cannot be cancelled as well as sublease is not profitable or possible. So this cost, okay, this cost which is makes the contract of the lease to be onerous. So for meeting this unavoidable loss, what we will do, we will make a provision for this contract. Okay, so this is what we mean by provision for onerous contract, and what we mean by executory contract is clear. Hope. Thank you.